Thanks very much to everyone who's joined us today for another AMA. This one is pretty much solely based around just sort of a myriad of updates that we've got. A slightly different format. We're going to go over some recent topics and things that have happened recently and how they potentially relate to the space and to us. And then we'll go into some more sort of generic updates. So, without further ado, Logan, we'll start off with a little chat about the situation that happened with Mantra and the tokenomics surrounding them, and some sort of points I wanted to raise about that, if that's all right.
Yeah, sure. I think it was like the low light of the week, if you can say it like that.
Yeah, it was very unexpected. I think for a lot of people, they're very expected by some others. So, on that note, I'll dive straight into the sort of what people know so far and what we think pretty much happened. So obviously their token price shot up very, very high and then basically dumped quite aggressively through a short period of time, and everyone obviously called rug. And since then, I think some information's come out that potentially the tokenomics of the project wasn't potentially as sort of concrete as it could have been. Now, they only had 10% of the supply or thereabouts circulating, which is not so much of a drama so long as the 90% of supply is well managed. And I think this is where the problem started. So from my understanding, they took a huge amount of that 90% and sold it OTC to people at a very low price. So for those who aren't aware, over-the-counter trades is where I say my token's worth $1 at the moment, but I'll tell you what, if you buy 500 grand's worth of it, I'll give it to you at 50 cents. So the moment I hand those tokens over, that person is technically, with their MetaMask and Phantom wallet, up 2x of what they should have been. However, if you don't know much about liquidity, depending on how much liquidity is in the project, you can only extract what is in the project to take. So it might say $1 million there, but if the project's only got 100,000 liquidity, you'll only ever extract at the high end 99% of that amount, so $99,000. So anyway, what seems to have happened is that there's some form of cascading sell-off where OTC whales and stuff and insiders started to then see the price drop, getting towards their 2x and break-even levels, and everyone's dumping them because there's so much supply thrown out there so quickly. This sort of an event can happen, and then obviously you have things like perpetuals and short trading and leverage trading on exchanges, which can exacerbate this problem, especially as these dumps cause longs that have been placed on the exchanges to liquidate, and it further triggers this all the way down, and that's why you saw this crash. And I think it's pretty evident to say that tokenomics is where these guys have come unstuck. But the only point I really wanted to make, I think, to our community and why that's relevant to mention, is that some people, as we've had discussions with other projects, some projects have looked at our tokenomics and said, well, you're only sort of 25-30% circulating. And we sort of reiterate, say, yes, we are, but for this present moment in this month, we are 100% circulating. Our tokens are locked; they cannot be touched. There is absolutely no way that a cascading event could happen with us. Yes, we have farms which pay out for people for locking up, but that is the luck of the draw, right? Farms is depending on you bought in, depending on how much you bought in, the way the price is, where you cash out. So it's a bit of a gamble, isn't it, farms, because of the price? But I think it's a really important point to note that just because you look at our token and you might say 250 million out of 900 million circulating, on face value, you need to dig deeper for these projects. You need to ask, where are those other tokens? And for us, they're locked, they're buried. We've even given you wallets to show you where those tokens, when they get unlocked, deposit. So all you need to do is track, I think, 2 wallets for us. So it's that whole transparency thing. And then I think, that he's come onto that Coffee Villa, he's done some interviews. And yeah, he looks like a rabbit in the headlights. He looks like he's been absolutely put through the ringer, and you can't help but feel a little bit sorry for him an ounce, because I think it's been caught out. So it doesn't help that you come on some interviews with a Patek Philippe watch. No one's going to be that sympathetic to you, but I think it just what it highlights is 2 things. One, dig deeper on tokenomics, because just because it looks like there's a lot of tokens that are buried away doesn't mean that necessarily that's a bad thing if they are controlled well by the project. And I think the second thing is how still these projects that get to the top 25, I mean, either they knew they were doing something malicious or they were ignorant. Either way, it's a terrible look for that project, because they either look incompetent or scammy. So again, not calling anyone that, but I think the important point to take away is that it shows you how naive and how early the space still is. And I think, it won't be long. He's a US citizen, I believe. I'm not sure whether he's based in the US anymore, but it's not going to take much more of these before they have to bring in some form of regulation. So a bit of a rant, but it touched a bit of a nerve for me, because obviously we set up our tokenomics to be fair. And on the flip side, when people just skim over them, sometimes they see it and they think, oh, wouldn't touch that with a barge pole, because look how much the supply is circulating. It's like, well, right at this moment now, that's it. That is it. It's all there. Yeah, that's kind of my little rant. Sorry, Logan. Anything to add
I
on
just
that?
wanted to add there, I think one of the parts from the CoffeeZilla interview that took me by surprise the most was that they're doing these OTC deals, right, at a big discount. So they're saying, give me $500,000 for something that should be worth $1 million. And what I'll do is, instead of just keeping it for operational expenses and growing out the company, I will reinvest back into the chart about 300,000 of those dollars to pump the price myself, leaving you with an excess of tokens that you purchased from me at a discount, and the kind of relative difference of that has now been reinvested back into the chart. So definitely, whether it be incompetence or malice, something was deeply wrong with the way that they decided to structure that process.
The look on his face it did seem one of him. If you've seen a CoffeeZilla, it was a bit of either lack of knowledge or ignorance, but he looked battered, like he looked embarrassed. And I guess you would be like, when we had that whale exit, I was massively embarrassed, and there's nothing you can do about that, right? It's just someone decides to offload. It looks terrible. Everyone points a finger at you a little bit and they say, what's going on? But there's not a lot you can do in that sort of moment. But it was when the CoffeeZilla guy said, so you pumped the price. And he didn't want to say he's pumped the price because it looks bad. But I don't think he was aware that that's market manipulation. And even in crypto, that's illegal. You can buy back the token, but you are not allowed to buy levels which perceivably create support or sell levels to sell down. You can't manufacture the chart. If you manufacture the chart and there's intent, that's fraud. That is market manipulation. Market buybacks and burns are fine if you just do it. That's why we do ours at the end of the month. End of the month, if the price is at 20 cents or is at 1 cent, that burn's happening within a 2-3 day span. So, but yeah, it was he didn't seem to know that he's a US citizen, right? So that's
That's risk taking.
It is very risky
crypto has never seen before.
Well, look what happened to the market making situation when the Russian guy got pegged, and that was all market manipulation. Those people that were arrested, and they were brought over from the US abroad. They were extradited.
I think another pertinent point to make here is how our view on OTCs generally. I'm sure that there is a fair and probably mutually beneficial way to do them. That being said, we know in the OTC space there's a lot of dirty money that comes through there, or there's a lot of grifters looking for a deal and looking to hurt your project. Once you've given over that amount of tokens in OTC, it's over the counter. It didn't actually affect the chart going up. So because there wasn't buy pressure in the chart, it was just buy pressure back into the project's hands. I think a lot of those situations are quite unfair to the holders, and we haven't done an OTC deal, nor do we support doing OTCs. We get the email every so often asking to buy a ludicrous amount of LNQ at a discounted rate. We don't engage with those, partially because I think there's a big risk to that money that you get from that OTC being quite dirty, but also I think it's quite unfair to the holders, because if you imagine the kind of equation here, on a normal buy, that money enters the chart, and then some other holder might decide to exit the chart for an equivalent amount, but at least that money makes its way into the chart, and it's controlled how much can get exited because you haven't given an excess of tokens. With an OTC deal, that money never touches the chart, right? It goes straight to the projects, and the projects give over tokens, and those tokens can then do the negative side of the equation to the chart, which can be quite unfair to the holder. So our company's stance on OTC deals is just we don't do them, and that's the end of the matter.
It's worth noting that we bang the drum about decentralization and transparency, yet an OTC deal is the complete opposite of that. That is you going behind their back and devaluing everything. It's people do it, right? They do it. It is what it is. But yeah, I think it's fair to say that is something that absolutely we do not entertain whatsoever, and won't entertain that, because it's like I said, this is the worst thing that happens, is that you keep giving them out and you forget how many you've given out, and then suddenly you've actually got this cascading thing. Anyway, that rant aside, I think so. My take on it is that, and this is my take. It's not the company's take. It's my feeling is it was just a bit of an overclockiness with OTC, and VK was another one. They raised something like 1.25 billion, mind-boggling amounts of money. Not sure what they need that much money for. Be careful, basically, guys. Look at tokenomics, dig a bit deeper, ask the question in our group, because a lot of the link guards are very well versed. Failing that, you can ask myself or Logan or whatever. And if there is a project you want to look at, just dig a little bit deeper into what they do and see how transparent they are with showing up information about lockups and stuff. But anyway, I hope they sort their problem out, and I hope the people who bought higher to get the chance to make that money back. I hope they do right by their holders as much as they can do. But yeah, so that was the first bit of news, and obviously you can see it touched a bit of a nerve for me from a tokenomics perspective. So I wanted to have a little chat about that. And the second is obviously our biggest friend, Logan, and someone that you hold very dear to your heart, and that's Ether, or the Ethereum blockchain.
It's funny, right? Because obviously I tend to be a little bit more detached from the general crypto goings on. You tend to be in the trenches, on the front line, very up to date with news, whereas I normally am head down with the devs. And so an interesting thing, and I've always been very long-term bullish on ETH. Just to clarify, I maintain long-term bullishness on ETH, but it's been this interesting trend where I've seen the industry in the last couple of months really turn on ETH and then turn on some of the fundamental values. So some of the criticism, which I think is very apt, but some of it which I think has forgotten where ETH came from and the foundation layer that's set for the world. So I don't know if it's cool anymore to be bullish on ETH, but I still am, and I think it was still a great idea to build what we're building in Link on the Ether ecosystem. And I just want to state that right off the bat. That's not a company opinion. That's just me personally, and I'm sure George has a different take on that. And we often have back and forths on this. They're quite entertaining. We should just do them live sometime.
I was playing around the soundboard again. I was going to chime you in with something there, but I completely boomed it up in my old age. Yeah, it was terrible. Sorry. No, I'm with you from a technological standpoint. You and I have looked, especially with LinqProtocol. We looked at Solana. We looked at Arbitrum. We looked at EVMs. We looked at the Cosmos ecosystem, and you kind of get back to the brass tacks, which is that Ethereum just seems to be the best place. It has the most builders, it has the most infrastructure, it has the most security, it seems to have the most sort of support, and it seems to it has the most longevity as well, and its reputation. It hasn't been offline ever. I'm sort of saying that like
it's never been offline. Yep. So I think it's had 100% uptime, which I don't believe any other network can say.
No. So I think for all the bashing, Logan, do you want to drag up that? I sent you that tweet, didn't I, about the render performance overutilization? Do you want to drag that up just to make sure that before I sort of spout something off? But the point I'm making is it was something to do with smart contracts, and builders in the space are at an all-time high on Ethereum, regardless of the price. Now, obviously,
I think it's like the normalized price over gas usage or gas used.
Yes,
that was the first time ever. What that implies, right, is that it implies that there is obviously some price level impact that undervalues ETH, but in terms of usage from the community, that has never been higher, and the trend line is still upwards. So on the basis of a chart like that, and I'm sure if you want to lie very well, you'll use the statistics, right? Statistics can be quite devious at times.
Yes.
But I think this is a general thing which we felt. Just a little personal tidbit here: we work with a really criminally high-end developer when we do some of the LinqProtocol build outs. He's just an incredible smart contract developer. He's been in the space for decades in the crypto space, and he has some very impressive portfolio. Nailed it, George. Well done.
Yeah.
Anyway, he obviously took a break for a while, and he came back, and we were busy figuring out some smart contracts for LinqProtocol, and he commented on how low the ETH gas cost is. So it's impressive to contrast not only the usage over time being at a peak, but also the steps that they have practically taken to reducing that gas load on end users. Obviously, we are feeling the effects of that. I know it's still hundreds, if not thousands of times, what you'll find in Solana or L2s, but there is an active kind of force that hasn't stopped in such a trustworthy, reliable network that I don't think there's any other way to see that than in a positive light. They've done a lot of good work, and the development community and the actual users of smart contracts obviously still appreciate that, because that usage is spiking to never before seen levels.
And it's probably worth mentioning that they have upgrades. They're constantly pushing stuff that people don't always see. So the Pectra upgrade, which is the next one, which has a load of different features. The one that caught my eye was the smart wallet integration. So if those of you are old like me, you'll remember an app called If This Then That. It might still exist, but it's sort of a crude element of smart contract, like an escrow system. So you can basically set smart contract parameters in your wallet, I believe, from what I read, to sort of say, pay so and so if, or pay this wallet if these parameters or these things are met. I'm not sure exactly what that will look like and how they'll roll that out to third party, but there'll be that functionality will exist. So they're constantly pushing. They are constantly sort of pushing those sort of development boundaries. And I don't think Solana is anywhere near as practical when it comes to smart contract development. Apart from launch token. So I tend to agree. Though I think Ethereum is the way. So the point I wanted to mention is that although it is taking an absolute hammering from a token price perspective, I don't think the development speed is slowing down. And I think if there is going to be any smart contract blockchain adoption, Ethereum is the first place you will see it. I'd be very surprised if something else jumps up in there and steals that spot.
Just one more point. ETH culture
Yeah.
did build a lot of what we're sitting in. The DeFi culture that came with ETH, their kind of core values, and I don't so much mean political leanings. I mean core values about what a good blockchain is, how it fulfills that purpose, how to build it in a way that is not destructive, that you make very careful movements, always in a positive direction. That outdated the kind of recent political shift that might have impacted people's perception on ETH. And I think probably long term we'll see that relentless commitment to quality that the ETH Foundation has keep sustaining the kind of current best working layer for crypto. So yeah, those are my thoughts. As I've said, I'm very long term bullish on ETH. It's one of my favorite frameworks for crypto. And again, whether or not any of us disagree on that doesn't matter so much. I do think the evidence in what they're delivering is still very, very clear.
Agreed. Well, that's section 2 of the weekly news update from us. And the last thing I wanted to mention was something about exchanges. Now, it started because someone said to me, someone said in the group a while back, like, well, when are you launching on another exchange? And I thought it would be really useful to just very briefly explain how more exchanges aren't necessarily a good thing, and then a little bit about exchanges and what their actual goal is. So very briefly, every exchange you list on, you need to provide the liquidity, you need to provide USDT and the token. So if you have 10 exchanges, it's much harder to push the token. You need a lot more money to marry the token. I don't say push the token. So if someone buys on one exchange, the other 9 exchanges will need to be arbitrage, and that's what the market maker does. He makes sure that those prices are within about 2% sort of slide. So if you imagine how much money you would need and how much volume of trading you would need to move 10 exchanges. So just more exchanges does not mean price go up. If you look at some of the smaller tokens that I know other people are in that are in the same sort of cohort as us, look at the liquidity. You'll find that from 1 to 10, the one that moves up and down the fastest will probably have the least liquidity, because it doesn't take much to move and shake that token. Not that it's a good or a bad thing, not my opinion, but I'm just saying is that more exchanges aren't necessarily that good, and the price tag to them is insane as well. Like to list on them, you have to have so much capital. So, and where did that capital come from? If you're not making revenue, it comes from the tokens. So I think it's really important that projects do look to push on exchanges, because there is a great marketing element there. I think then there also is a great sort of geographical element. A lot of people don't trust themselves with decentralized wallets, so they'll go the centralized wallet. They'll think, well, Binance can look after this better than I can, or Coinbase will do a better custodial job than me with my bit of paper with 12 things written on it. So I think having a token that is on some exchanges gives people in different parts of the world the ability to potentially trade or to buy your token or whatever they happen to do in a manner that's more beneficial for them. However, let's make no mistake, exchanges are laws unto themselves. They operate as a business to make money. You are the fodder for them. You go on that exchange. If you leverage trade and you spot buy, you buy a token, you can take it off the exchange and put it in your wallet. If you leverage trade, just try and do that and see what happens. You can't. You can't take that trade out, because that trade's locked in, because you're not actually bought the token. You've bet the token. You are gambling on the token hitting a certain price, and they reward you exponentially as that token goes up, and then they sting you when it goes down. That's why you see wicked spikes and peaks and drops in exchanges, purely because they need to liquidate you, because that's the game you play against the house. If you spot trade on an exchange, doesn't matter. It's kind of no different. This exchange goes bust, it's kind of no different. If you leverage trade, you are gambling. You are like heavy gambling. So, and the reason I'm ranting about this now is because I saw a post come out the other day from Binance. And I think this is like really sour. And I'd have happily argue with like someone like CZ or whoever's in charge of them now. I forget what's his name, Richard Tang. Right? It was a post. They just said, "Don't quit." And I just thought, yeah, you've completely shown your true colors. The reason they list memes is because memes get more volume, because people want to buy them. They can liquidate more people in memes. They'll just go with whatever's there. If it's utility, you watch launch all the utilities. If it's RWA, if it's whatever it happens to be, if DeFi comes back, they'll just pump all those tokens. Their job is to make money, whether they're PLCs or not shareholders, but for the people who invest in them and their backers, that's their job. Don't think that they are custodians of crypto. Don't think that they are here to, carry the flag of Web3 into the future. They don't care. They don't care. They will just take that money. Now, don't get me wrong. They do a great job on a lot of things they do, but you've got to remember their job is to make money. That's all I'm saying. Their job is to make money. If they're not making money, they're failing. And so just be very, very careful with leverage trading. And that whole don't quit from Binance I think that's a real low blow, because that is just egging on a gambler. That is just poking the bear, isn't it? So like, go on, mate, just one more monthly salary. Just dump it in on a 50x trade. Like, it's just, I think it's, and this is where I sit and I say you need regulation. Like, there needs to be something to help people who take it that step far. But yeah, so just be careful. Just remember their businesses, and they're there to make money. So that's all I want to say, really. I mean, Logan, what are your view? I know you don't trade at all because you're too busy and I don't let you. So
I just keep losing. But no, I fully echo your sentiment. It's like what was more egregious is like on don't quit, they highlighted do it as words.
Yes.
And I echo that sentiment. It's just like, the people have a problem, you're part of the problem, and what you really are doing is like, it's quite immoral, egging them on, trying to get them to invest money that they probably don't have into some shitcoin that is not going to go anywhere, so that you can mass extract. And I think that's fundamentally disgusting.
Yeah, it is. It's not great. So again, just a bit of a, especially if you're down 60, 70, 80% or whatever, you're down 40%, just think twice about doubling up and trying to, to make it back, because, we've all been liquidated. We've all tried it. Yeah, it's not a nice feeling. So just stay safe. Just stay safe. Not you. You've never been liquidated. You never leverage traded.
I don't touch leverage.
It's so morally pure. I did in 2020. I did it.
No, I knew you did.
I bought Ethereum for like 900 20x leverage. I had no idea what I was doing. I was like, I woke up like 2 mornings like, this is like free money. I'm on like $8,000. And then I woke up next morning and it was just like the most disgusting candle you've ever seen. Totally manipulated. Like, it was just like it dropped for, I don't know what it was, but it was like 1,400 down to about 700. I was like that. And it was like, yeah, you've lost your money. I was like, gotcha. That's why not everyone's rich doing this. So I'd like to say that was the last time I leverage traded, but it wasn't. But I haven't done it this cycle. So anyway, look, just be safe, guys. That's what you don't quit. I'm not going to quit, Logan. I'm going straight back after this call. I'm going on to another exchange, and I'm going to ape in a new token. Anyway, so the point to take away from that one, from my perspective, is the exchanges are great at what they do. They allow you to sort of, safely move tokens around. They have loads of different token chains you can move between. They're great for that as well. You haven't got to go through dodgy bridges, but just remember their businesses and they're out to make money. That's all. And I think they'd agree. Right, enough of that. That's wrapping up the news. And we will now move on to probably what people are here for, which is updates from LinqAI. So probably best to start off with the biggest, most complex beast, which is LinqProtocol. Logan, do you want to just give a small synopsis? Because a lot's happened since the last time we spoke.
Yeah, I think you guys have seen the dev updates. If you haven't seen the dev updates, go back through the Twitter account. They were posted like, I wouldn't say every Wednesday, but sporadically as and when they become available. We've been talking a lot about how to manage those dev updates going forward, because some weeks we do just a shit ton of work, and it's not really things that are sexy on screen. It's really hard to demo some of those things, and so we're working out how we're going to strategize posting these updates going forward. And as much as we can, when we have something to show, we will. But LinqProtocol has been making great progress. The parts that we're busy with now start getting so complex, and there's so many moving parts that it's going to be hard to wrap a concrete update into a couple of minutes. But something I think I can share, and I'm not going to put a date on it, but we're getting very close to being able to make a demo where we actually do launch some container, and just to clarify terminology here, container in this case would be the application we're trying to run on someone else's computer, compiled into a single binary. We're getting very close to making a demo where we can show all of you the system working. The installer has been coming along great. The installer is cross-platform, so if you're on Windows, if you're on Mac, if you're on Linux, our installer will work for you. We did a quick preview of of the Link Protocol installer, we had some ASCII art up there, and we thought it looked quite cool. But that installer's grown a lot since we showed that off. There are so many unique approaches to problems that other decentralized compute networks have that I think we've just taken a very different route to them, not only on the kind of high level architecture by trying to seed it with the demand that we're generating from the SaaS side of things, but also in the low level architecture, just some ways we're approaching complex technical problems. I'm very proud of the work that we're doing, and we have really, really smart people working on them. And so, yeah, I think that's probably the most I can say on Link Protocol that isn't taking your eyes and stuffing them in the code base and saying, look here. Something important that I don't know if this went completely under the radar when we talked about this in the previous AMA, but we are planning to open source this code as and when it's completed. So as we complete things, we stabilize them internally, we will open source them, because I think this is one thing that we know as a given, is that for Link Protocol to succeed in the way we want it to succeed and to achieve that actual vision of a decentralized web hosting platform, we need other developers to start coming on board and to start supporting us. And I think this is something we could also touch on, is that our content strategy will probably take a pivot in the next coming months to attract these more developer-minded people who take interest in actually getting into code bases, running them. You know, we have a multifaceted problem with Link Protocol. One is we need to keep producing SaaS applications so that we have demand to seed the network with, because we've seen this is historically where a lot of other decentralized compute networks have failed, is they get a lot of people with computers and they're willing to do work, and then there's no work for them to do. And so that's one problem. The second problem is actually building the protocol itself and getting developers to join you in that fight to build the protocol, where they also want to partake and they want to build custom solutions. This is something where a Cache, Golem, RLC, their solutions are semi-open source. Some parts of them you might find open source, but not enough to actually pick it up and run with it. And we're going to make a big difference there, where everything that we do that's successful will be open source so that the developer community can build on top of it. And, you know, it's kind of paying homage to the tools that we're using to build this and the tools people like Cache and Golem have used to build their networks. All open source, industry standard, enterprise level cloud management solutions that we're using internally. And so we'll follow that trend. That's the second problem, is attracting developers to Link Protocol. And the third problem is attracting actual demand to the protocol. So people with computers and servers that they want to earn money for leasing out to Link Protocol. And so I think the team's been doing a great job in hitting timelines. I think we're ahead of schedule on some. I wouldn't even say that we're behind on anything right now, but that may change as time goes on. Something that I'm not sure if has been clear enough in some of the marketing material we've been putting out, but is clear on the roadmap if you've taken a look at it, is that this is a very big project. It will span multiple months to completion, but each month we take a step forward towards something that really will be groundbreaking when we release it. And so that's the updates on Link Protocol. I think that was pretty comprehensive, but if I missed anything, George, feel free to quiz me.
No, I will assume that you left out the plan of true decentralization for another day.
I think I mean, I'll touch on it just because you teased it, right? Is that there are the way we're approaching Link Protocol is that we have a semi-decentralized state that will be a working version that does leverage some things hosted by us ourselves. For instance, a Git repository where we can manage actual containers being uploaded and downloaded. Or for instance, a load balancer to decide which nodes to send it to. You know, there'll be a lot more to say about this in the future, but right now, what you need to know is that there will be a two-pronged approach. One will be semi-decentralized, the first version of the working product that we can get out there that people can use and people can start participating in, and that we can start hammering around inconsistencies or bugs as we find it there. And then the harder part, and arguably the one that will stretch more months, is full decentralization, which I can confidently say no other decentralized compute platform has done this before. And I understand why. It's an incredibly hard challenge. But, you know, that kind of harkens back to the point of attracting developer support, and why you'll see our content catering more towards developers, because we need them on board for this. And it's such a big mission that without a bunch of committed contributors, we will face severe challenges in not so much getting to the semi-decentralized version, but fulfilling that genuine, true, purest decentralized vision that we have.
And it's probably worth mentioning that the current sort of decentralized compute platforms that exist are that semi-decentralized state.
Yes, 100%. It's not like you can turn it off. Someone can turn it off.
Yes,
and that's what we're trying to mitigate with Link Protocol.
Yes.
You know, just a tidbit there. So sorry, I was going onto Hetzner, which is one of our server providers, and I was trying to buy a server, and I haven't used Hetzner since a couple of years ago, and it was a new account under the Link AI company, and they didn't want to give me the server. And so what I had to do is I had to download some facial ID software, and I had to scan my face and give them that data just so that they can verify who I am, just so that I can have access to a server. I think that type of gatekeeping by these big compute platforms is one of the reasons that honestly should make you evangelical about a concept like this, because it really is something that the world needs, and that if it gets left unfixed or unsolved, I don't think the future of compute is going to be very fun and incredibly centralized.
Yeah, agreed. And obviously saw what happened with AWS during the week. So they went down, and downtime, and everyone else it's just crippled. That's almost like the whole world, the whole digital world comes to a stop. So yeah, that's another completely separate debate, because there's loads of ethical questions that can be raised during that one. Okay, so LinqProtocol, Synthetiq product hunt launch number 4.
Do the clapping sound effect now.
Okay, let's try again. So you announced it, and I'll clap.
Okay, so we did a product hunt launch for Synthetiq, and it went really well. Yes, nailed it again, George. I'm loving this. We should keep the soundboard here. Brass tacks, we did a product hunt launch. We got number 4 for the day on product hunt, amongst, I think, 40 other tools that launched that day. But more impressively, we got number 3 for the week in the marketing category. So we got a ton of eyes on Synthetiq. I think as of right now, we're sitting on probably over 1.5K. We shared a screenshot earlier in the week of a Google Analytics dashboard, or that might have been the last week, and it had 600 and something odd signups on there. That same number is now 1.5K. So we really have got a lot of traction from this. It was a lot of validation in a space that isn't crypto, which was just really refreshing, especially as the markets don't look great. And so finding some excitement and some success in a place where it's completely controllable, that was really nice. Alongside all the other eyes that we got, we were approached, and this really took me by surprise how many people approached us afterwards to reach out to either collaborate or congratulate higher level people, and a lot of them not from the crypto space, CEOs of bigger SaaS companies that you would have heard of, that I'm obviously not at liberty to drop names for. But this was quite surprising. We've been invited to interviews with more successful channels and platforms, and so this was a really refreshing launch. Synthetiq itself got a lot of feedback. We got a lot of users on it. We're working with them as we're shipping our new updates for custom audience building, which will give you a little bit more control over the audience that you're interacting with on Synthetiq. So that was really great, and definitely a top work by the team. That was a moment that made us all internally quite proud. So yeah, that was Synthetiq launch. I don't think there's much else to say about that. If you haven't played with Synthetiq yet, go sign up on use.synthetiq.app or synthetiq.linkai.com. They'll both take you to the same place. I highly recommend going to play with it. I think it's one of the cooler things that we've done as a SaaS product, and I think the legs that Synthetiq has are quite insane.
And I won't go into it, but there is a significant amount of work you're putting into evolving the tool even further and developing it further with a couple of different updates. Isn't that correct?
Yes, 100%. And also some pitch decks that we're going to start pushing around behind the scenes. And you won't ever hear an update about that if that didn't go well. But if it went well, I'm sure I'm going to be singing tunes about that in the next AMA.
Yeah, definitely. We'll bury all of those terrible responses we have.
The final thing to touch on is just Aura. We think it's very important. So there's not too much to say on Aura right now, except for the fact that while we were developing Synthetiq, I think it was a little bit more work on the ass end than we thought it was going to be, and so it took a lot of dev power. We had to drag some people off of Aura. You would have seen in the past, we dropped some updates of tool use with Aura, of multiplayer chats, so to speak, where Aura is aware of multiple people inside a kind of work chat. And one thing that's become very clear is that we think Aura will be best suited for a managerial workload. And a lot of what we were playing with Aura before were marketing adjacent workloads. And as we've kept developing it and as we've added more tools to it, we think that managerial places is where Aura should go. And so that will be the next kind of phase for Aura development, is leaning more into managerial things, especially in smaller, slimmer remote teams like we have internally. Aura, we think, has a big opportunity to automate and optimize a lot of the kind of day-to-day workflows that we have inside the company, stretching as far as something like project management. That's all I can really say on Aura for now, but the reason I brought it up is just because we hate doing things where we tease something and it doesn't actually materialize. And I've noticed Aura was teased like a long time ago. It is still something that we're actively developing. As a matter of fact, right after Synthetiq, we got back on Aura. And so it's something that's coming. It's something we're still going to release. But also, as you can appreciate, the agent and LLM landscape has been crazy. It's like Gemini 2.5 Pro, and then it's 3, and then it's 04 Mini. And every single time this happens, like there's such a big additional, things that last week we were trying to get Aura to do, this week it can do it. And so, that's also been a little bit of a reason for why we've delayed progressing Aura, is because there's so much uncertainty. Like, I don't know if you remember when GPT-4 came out, that was like it. And then maybe like 6 months later, we had Claude, and they dropped Opus and a couple of other models. And then that was it again for like 6 months. So the speed that these agents are churning out, well, I say agents, these models are evolving at, really gives us so many new things to do with it every day. And so, at the same time, as what you want to stay at the forefront, you don't want to be competing directly with the model manufacturers, because there's this famous quote by Sam Altman, and if I find the video, I'll drop it in the Telegram group, where he said, if you're an AI startup and you're considering, building something, think about it like this: like, would GPT, insert an integer here, would GPT-6 or GPT-7, would that be capable of it on its natural path to becoming like the best assistant? Does it gain that feature? So for instance, does it gain being able to run a Python script? Does it gain being able to search the web? These types of features, I don't think are smart things to differentiate your products with, because that's exactly what OpenAI and Google and X are all working toward as well. With Aura, we think it's very important to build in features that not only give us a competitive advantage that will last longer than a couple of months, but also staying up to date on what the latest models can do. And so, that's kind of where we are with Aura. I appreciate that that's not super clear in terms of when you can expect it, but what you can expect is that we're still busy with it, and we will release it, right? So that's still in the works, and I think there's some really cool features we've thought of there that we are pioneering. At the same time, the model landscape is changing so quickly, so we're trying to stay on top of it and trying to keep Aura as up to date as possible.